Welcome to my daily review. You're taking a look at a daily chart of HEPA Pharmaceuticals, had a positive phase 2 trial data, and you can see it's up 118%, and it's living in the penthouse. Like I always say with biotech stock, it's either the penthouse or the outhouse, and Rain Oncology found the outhouse today, only down 88%. Pretty tough in in the pharmaceutical and biotech sector. It's pretty crazy. Today, I just want to take a look at stocks. Obviously, there's more risk on right now, and that the staples are taking a back seat, and defense and growth is more in vogue. And I want to take a look at IONQ, just stocks coming out of stage 1 bases. I think we have to catch some of these. This is computer hardware stock, and obviously just busting out here of a stage 1 base, and that's the way you want to do it with a lot of volume. So that stock looks good. I'm just seeing a lot of these. I'm going to try to flip back and forth for the daily and the weekly. This is a weekly chart of SDGR, Schrodinger, and it definitely powered. This is the way you want to power out of a stage 1 base. This is a weekly chart, and that's 1 day of volume. So this promises probably to be a really heavy volume week. And there's the move today, nearly 18%. I saw it up like 10%. I was going to take a swing at it, but I have a thing about buying stocks that are up 10%. It proceeded to go up another 7.5%. So congrats to the longs at Schrodinger. There's just a lot of stocks that are emerging from stage 1 bases. This is HubSpot, one of our leading stocks. And they reported earnings, and just you could see this pretty pronounced cup with handle. And then after earnings, it just blasted out of the handle here with volume. And HubSpot just continues to make new highs, just a super strong stock. And this is the type of pattern that, I think you need to gravitate towards. This is Datadog. Another one of these, they might seem, a little overvalued, and they were out of, favor for a long time, since like November of 2021. But now these things are starting to pop above. This is $90 here for Datadog, and you can see the stage 1 base here just emerging out of it. And I think some of these you have to get a hold of here. CrowdStrike is another one. I'm going to put these on our ready list and watch list here. I like CrowdStrike here above 140, and you can see that this is just starting to emerge at this 140 level. And yeah, I like it above 140. It's close at 147 today, so another good day for CrowdStrike. Let's take a look at the daily chart there, and there it is, over 140.21 right there. Good job, CrowdStrike. Good people work there. But I can't get too personal. TXG is another genomics one. Obviously, it doesn't have the fundamental profile, but it looks like it wants to emerge out of this stage 1 base here. And if it wants to, we're going to let it, right? I wouldn't mind taking a swing at this one either. You can see the tight consolidation pattern. And if they want to move higher, without the fundamentals, I'm going to take a swing at a couple of these ones. Upstart is another one. Obviously, this is a pretty popular stock, heavily shorted, but you can see here this stage 1 base. Maybe I could take a look at the weekly. You can see it just popping above this level right here. It was about the 27, 28 level, 26.35, and it broke above that today. So Upstart maybe on the upswing. It has a long way to go, a lot of ground to cover here. There's a lot of overhead supply with a lot of short interest. 20% it looks like. So I'm always leery of stocks that are heavily shorted, because I figure the shorts know something, but maybe they're just about ready to get run over. And HashiCorp is another one. This is a nice, I would get in this early, and I'm thinking about it here right about 33 level. It has this 33.68 buy point here, and once above that, the standard buy point at 37.31. So if you take a look at the weekly, these guys IPO'd right at the wrong time, right at the end of 21, when software was out of favor. So it has a lot of overhead supply, but this is a pretty pronounced stage 1 base as well. and HashiCorp, another good company with a lot of sales potential and earnings on June 2nd. So that's definitely one to watch. Monday, they just reported MNDY, and you can see this cup shape pattern here. Now it pulled back to, it's pulling back and the moving average is catching up. So this is definitely one to watch there. I wouldn't wait till 171. I'd rather catch it at a moving average. GLBE is another one that just reported earnings, definitely a state. You can see the base here setting up nicely. A lot of overhead supply, I know, but that's a nice consolidation. A little pullback today. Definitely one that I am watching. And DraftKings, we had this one on our watch list and ready list at about $20. Actually took this for about a 20% ride here. I think this day right here. I don't know if it was earnings or what. I forget the circumstances, but yeah, it was up, almost 16% one day, and it's just like pulled back to its 21, then popped the last couple sessions. So that's a good segue, because now after looking at stocks in stage one bases that are emerging from stage one bases, I want to take a look at stocks that are pulling back to their moving averages here. And this is TGTX. TG Therapeutics obviously had a massive move since last year, and recently they had earnings. I think it was May 1st, and it's pulled back sharply here. Now I expect it to get support here at the 21. If it doesn't, you got to look out, because it's a biotech stock and it could travel quickly to its 50, and I would not want to make that trip. So I'm looking for support there. Dexcom, another one on our list, pull back to the 50. Got a little bump today, but I need this thing to ramp higher and make new highs here. So I'm looking for a little stronger bounce from Dexcom. Meritage Home, the housing stocks are a little iffy to me. They've had huge runs, and now they're pulling back. This is a Meritage Home, MTH, pull back to the 50. I'm going to see if it gets support here, or if they fall through. I'm going to talk about some of these other staples later on. Palo Alto Networks, this one pulled back to its 50 as well. Actually, it sliced its 50, ran through it, and then now it's pulled back to it. So Palo Alto Networks, I really do not like the action in that one at all. SKWD, this is an IPO, Skyward. It's a spinoff from one of the major insurance companies, but this is a nice IPO breakout, now pulled back to the 10. So I'm definitely watching that one as an IPO stock. NNOX, this is a medical systems equipment company that got a FDA approval recently, and it just skyrocketed, pulled back 3 or 4 sessions in a row to its 10, and now it's popped again higher. This morning they had earnings. It started out as kind of a muted response, and then it really took off and had a nice 10% gain today. I expect this to be taken out right here, 21.50. That would not surprise me. It did that fairly soon. First Solar is another one that fell out of favor after earnings, and then they ramped up 26% when they bought an $80 million company. Now it's pulled back to the 50 simple moving average. So that one's kind of trading erratically as well. Shockwave, this one is rumored to be bought by a few companies, so it has a little bit of a bid underneath it, but it pulled back to its 21, just trading sideways. So the shorts can't push it any lower, the longs can't take it any higher, and it's just going sideways. ELF reports earnings Wednesday, pulled back to the 50 today. I'm out of this. This is a heck of a run. Just gonna have to wait till after earnings. Retail has taken a hit here recently on some of the CEOs saying that the U.S. consumer is slowing, and some of those retail stocks have been hit pretty hard, and I don't want to take that hit. LNTH, this is a medical product stock that just pulled back to its 10. This is an earnings boost and pull back to the 10 and now found support, but it's kind of like in between the 10 and the 100. It can't get above the 100 level, and it's getting support at the 10. So the things I expect it to tighten up and continue to tighten up. Novo Nordisk, Pfizer came out with news that they have data for an oral weight loss drug that's as good or better than NVO, but that's a lot of bluster. We'll see about that. Ozempic is and Mounjaro from Eli Lilly is, best in show right now. So this stock just closed flat on the news. I did want to take a shot at some of these staples that are coming down, these defensive stocks that were trading at 30, 35 multiples. You can see the PE here on Hershey's, and now they're starting to come off. So this is what I'm talking about, that growth is in vogue. Investors are starting to pay up for growth. And these staples like Procter and Gamble and Hershey, they're starting to pull back and get whacked a little bit because they were too rich. The multiples, usually these things trade at 12, 14, 15 multiples, and they were twice that. General Mills, another stock, just getting hammered, and rightfully so. I mean, these things were trading at, they're just a little too rich. And the thing was that people were getting a little too defensive and a lot of short positions and a lot of people on the sidelines. But now they have a little bit of a FOMO and they're starting to buy these stocks that are a little more risk profile. So I look for that to continue. And I'm going to be posting more stocks on our Reddit list that are emerging from stage 1 bases, and we never give up.